Hello and a very good afternoon to everyone. So just as the European cash bourses do close down for the day, just going to take a recap of the main events today. So that headline there being the ECB rate decision and press conference. So firstly, in terms of that rate then, we saw them keep it on hold at 0.75% for the main referee rate. In terms of the deposit, that was kept at 0% and the rate for the marginal lending at 1.5%, so no change. There was some expectation of a 25 basis point cut to the main referee rate, with around 50% of analysts surveyed going for that. So we then did see a bit of a reaction across the board, although it was quickly paired with concentration being on the press conference from Draghi. Now, at that press conference, in terms of what we did see, actually we saw very little. We saw a lot of the comments from Draghi in line with source comments we have seen over recent times. So purchases will be in the secondary market. They will intervene to buy shorter dated bonds with concentration on those maturities between 1 and 3 years. They won't be targeting specific yields and yield spreads. And the bailout funds, the EFSF and the permanent bailout fund, the ESM, they will be the main methods of intervention. Now, apart from that, we also saw the ECB revise down growth forecasts. Now, this was in line with expectations. We did see officials from the ECB say that they were going to do this, however, not fully priced in, and therefore we did see a bit of a sell-off weakness in terms of the euro currency across the board. We also saw moves high in terms of bond future, and a bit of a sell-off in the equity space, the DAX future coming under some selling pressure. So they revised down this year's to see it between minus 0.6 and minus 0.2%, so that's a lower range than the previous forecast. Also cut forecast for 2013 as well, so that was the main driver there. Now, in terms of the performance in the shorter dated peripheral bonds, Spanish 2-year yield, you see but drop below 3%, so we did see a bit of a rally and outperformance in terms of that shorter end. Similar price action seen in the Italian 2-year did fall and print fresh lows for the session. Now, we also saw longer dated, so 10 years rally, BTP's rally and printing fresh highs for the session. So we did see a bit of market reaction, however, nothing too extreme. Markets were actually fairly contained. We were perhaps predicting quite an aggressive move in the markets if Draghi did indicate anything particularly new, but as they were alongside expectations and those source comments we have seen, nothing too exaggerated. Now, apart from that, before the ECB rate decision, we did see the Bank of England rate decision. They kept their rate on hold at 0.5% and their asset purchase facility target at 375 billion sterling. Again, as this was in line with the expectation, not too much market reaction, although a bit of strength in the sterling currency considering no boost in the QE from the Bank of England. Now, as well, we have seen the ISM manufacturing come in from the US. That's the non-manufacturing reading. Came in better than expectations, 53.7. Expectations were 52.5, and hence we saw a bit of a rally in the US equity futures. So that's the main wrap-up, really. Other than that, from the ECB, we did see that Draghi noted it is possible they could incentivise states to issue shorter debt, so that got quite a bit of focus. Be interesting to see any more developments on that. That's the only real comment from Draghi on that subject. For the time being though, that's enough from me. Hope you enjoyed this afternoon. It has been pretty busy, but we'll join you a bit later on with a Wall Street Bell closing wrap.